Hello and good evening, everyone. Welcome to this evening's presentation on foreclosure and eviction prevention. This is part of the National Foundation for Credit Counseling's Faith-Based Alliance Economic Empowerment Series. The partners in this endeavor include Mount Zion Baptist Church of Philadelphia, Enon Tabernacle Baptist Church of Philadelphia, Freddie Mac, and Diversified Resource Network. I want to start by thanking our planning committee and our presenters for the evening. Our sponsors are Wells Fargo and TD Bank, and you, our listening audience. At this time, I want to turn it over to the creator of this endeavor. And my friend, my partner, Herman Palmer, please take it away.
Latanya, thank you so much. I appreciate you, and I appreciate all of you for joining us. This is the National Foundation for Credit Counseling's Faith-Based Alliance effort. Before we begin, I want to let you know that I am Herman Palmer, Vice President of Outreach and Inclusion, and I want to give you a little bit about the NFCC, what we do, and how we help. The organization was founded back in 1951. And is the nation's first and largest nonprofit dedicated to improving people's financial well-being. Our mission is to empower consumers to address their challenges and take charge of their futures. We have close to 300 member offices serving all 50 states, Washington, D.C., Puerto Rico, with over 50 member agencies and over 1,100 certified counselors who are ready, willing, and able to help. Our goal is to help everybody. The clients that we have include multicultural communities of color, the underserved, military families and veterans, small business owners, and student loan borrowers, just to name a few. The areas in which we offer counseling support include general financial counseling, housing counseling, which is made up of pre-purchase, foreclosure, and eviction prevention, as well as reverse mortgage counseling, small business owner coaching. We have student loan counseling and bankruptcy counseling. And I am, how do I say? I am incredibly excited about tonight's presentation because I think it is very timely. It's a subject that, given the state of our economy after the COVID-19 pandemic, is very timely. Tonight, we're going to be discussing foreclosure and eviction prevention. Our presenter this evening is Mr. Rulon Washington of Wells Fargo. Good-looking brother over there in the corner. Before we begin, I want to review some key ground rules. I want you to know this is a safe space. And by safe space, I mean, I don't want you to think that there's any judgment or anybody's looking at you with the side eye, anything like that. This is a place where you can ask questions. This is a chance for you to get answers to what might be bothering you. And there's a chance, if the question has occurred to you, it's occurred to several other people, and we need somebody to ask that question so we can get it answered. You tuned in for a reason, and we're here to help you get answers to your questions. If you don't ask, we can't answer. And there are no dumb questions. There will be a brief survey connected to this session. Please, we're asking you to participate. It's only about 2 to 3 minutes. We want to hear from you. We want to make sure we refine the program to make sure we're giving our attendees exactly what they need, what they want. This is meant to educate people. Now, I'm gonna tell you straight up, everybody here is smart. Everybody here, whether you're a presenter or you're attendee, you're smart because you recognize there's an issue and you've come to get help. So we're not going to posture or be, sedity or anything like that. We're gonna be real. This is a place where you can get real answers to real questions. I'm gonna use ain't. I'm not going to use my very high point professional self. I'm going to talk like we talk around family because it's that important. You need to get information. So now, with all that down, it is my pleasure to introduce this evening's speaker. It's Mr. Rulon Washington, who serves as the East Region Leader for Mortgage Sustainability, a division within Wells Fargo Home Lending. In his role as market leader, Rulon supports 24 states on the East Coast, with the additional responsibility of handling over 850 nonprofit housing, counseling, legal aid, and local government relationships. You are a hardworking brother. His responsibilities as market leader include the advancement of housing council relationships, identifying housing needs through grassroots communication, and supporting Wells Fargo's national nonprofit engagement strategy, for which we are greatly appreciative. In addition, Rulon supports Wells Fargo's social impact and sustainability, corporate communications, government and institutional banking, and government relations and public policy teams through strategic outreach. Rulon is a member of Wells Fargo's Black African American Leadership Program. He participates in the Black African American Connection Central Florida Chapter Team Member Network and serves as a dedicated board member of the Florida Habitat for Humanity and Help Community Development Corporation in historic Eatonville, Florida. Please welcome our presenter for this evening, Mr. Rulon Washington. Rulon, come educate the people.
Herman, I love it. I love it. Well, you forgot a few things. Take out the trash, wash the dishes, right? Cut the grass. Yeah. So it's a pleasure getting a chance to spend with you this evening. This is my second iteration of supporting NFCC and the work that we're doing in the faith-based space. And the first one was exciting. I think we're gonna top that one this go around as well too. Herman, one thing I do want to say is I do second your thoughts around this being a safe space. So, as folks hear me go through this presentation, I created this presentation by hand. So I made sure that it is something that's palatable, something that's easy for folks to follow, because mortgage is complicated. Mortgage is extremely complicated. It's very exciting when you're getting into home ownership, but once you're in home ownership, it's a journey. And one of the things that I pride myself in is trying to make sure that home ownership is easy to understand. And I know from a bank's perspective, sometimes it can be very complicated for us to spell out, how to get the assistance or how to get into a home or how to maintain that mortgage. So essentially, that's what I want to do today. So as Herman mentioned, I represent Wells Fargo Home Lending, and I have a very unique role within the company. Herman mentioned a few things, but just to put that in very brief terms, I essentially support all of our servicing and all of the work that we do with our homeowners in our portfolio. So it's 5 million mortgage customers that Wells Fargo has that are mortgage customers. We are the largest mortgage servicer. I've been in this space for, over 13 years. I've been in this specific role for over 10 years. So the good and the bad, I've seen it all. I initially started my role during the housing crisis. And so if you think about some of the worst scenarios, I was a part of that. Yeah, and actually supporting organizations like NFCC and really trying to make sure that we can help as many homeowners as possible. And so I'm excited to talk through a few things today. This is not a scenario where you should be shy. Feel free to add questions in the chat. I am an open book. I'll try to answer every question that I possibly can. I'm primarily going to talk about foreclosure prevention, but I also have some insight around eviction prevention as well too, because Wells Fargo does support legal aid organizations that help out tenants that may be facing eviction. So I have familiarity around that as well too. Can we go to the next slide, please? All right. So a little bit about just what my team does, right? So mortgage sustainability, that's a full word, right? When we think about sustainability, it's essentially what are we doing to make sure people are staying housed, right? How do we create sustainable situations? When someone gets into that mortgage, it's a 30-year commitment. And how do we make sure people are empowered and communities are empowered, specifically communities of color? So we got to make sure that we're doing our part as a company to make sure that there's enough information out there and resources to connect the dots. As I mentioned, a lot of my work started from the housing crisis. And in that role, during the housing crisis, I was responsible for providing the grassroots outreach in those markets that were hit the hardest. Ironically, some of those markets that were hit the worst were our Black communities. And so I want to make sure as I move forward through this presentation that I use that same information that I was able to share during the housing crisis, that I can use that today, right? Because it still resonates to today. It's a lot of misinformation out there around the process of staying in your home, specifically when you get in trouble and maybe facing foreclosure. We want to make sure that we can support you in every way possible. So I have a lot of experience in really understanding all of the scenarios that may happen when someone is facing potential foreclosure and or eviction. My team, in addition to the work that we do around outreach, we also engage with HUD certified housing counseling organizations such as the NFCC. So many don't know that across the country, there thousands of housing counseling organizations. Specifically, I manage close to about 1,700 across the country. And those organizations we empower through our philanthropy, some of our giving, providing resources and support, but essentially they are the lifeblood for making sure that the homeowners that are impacted negatively, whether it's facing foreclosure, losing their job, getting hit with the pandemic, that they're on the ground helping as many people stay housed as possible. So a part of my role is to support nonprofit housing counseling organizations. Later on in some of my slides, you're going to see a link to the HUD.gov website that basically lists all of the nonprofit organizations that are in your specific market based on zip code. But I wanted to make sure that I mentioned that, nonprofit organizations and housing counseling is the lifeblood of some of the work that we do. Without those organizations, it would be hard for us to support our customers the right way. And I mentioned that Wells Fargo, we're doing a lot in this space, but one of the things that Wells Fargo did that I'm really proud of is we didn't leave this space. So after the housing crisis, we continued to stay engaged from a grassroots level. So working with housing counseling organizations, cities, local governments, elected officials to really understand how we can support the work being done. A lot of other banks, they transitioned out of the space once the market started to recorrect and things got a bit better. When foreclosure slowed down, a lot of banks chose to move away from servicing mortgages or to have this type of activity. So Wells Fargo is currently the only financial institution to have a dedicated team supporting diverse homeowners in our mortgage servicing portfolio. And when I say team, it's me. So I am the team. So if you don't mind sliding to the next page. All right, so I said me, but it's also a peer of mine. So it's two people doing the work all across the country. So myself, I'm based in Orlando, Florida, but I cover everything on the East Coast. So if you see that slice on the screen, that green is all me. My peer, Martin Sanchez, based in Los Angeles, California, he focuses on all of the blues, specifically the West Coast. And together we work to really understand how we can support homeowners that may be impacted by potential foreclosure. And on top of the work that we do nationwide, we also support organizations such as NFCC from a philanthropic perspective, supporting some of the missions and goals so that way we can support. And one shout out for Herman is this faith-based work that's going on. It's very, very, very impactful. It's very few organizations that have taken the step to partner with faith-based organizations to really provide the information that's required to support people across the country, right? So it's really important that we partner with organizations such as NFCC to really understand how we can support our communities. And so even though I have that slice in the green, I'm dealing with everything across the country. As I mentioned, in our mortgage servicing portfolio, we have over 5 million customers sprinkled all across the country. So at any point, there could be something going on where someone's facing foreclosure. So we have to be dead center and make sure we can support that particular customer in those communities that they're living in. Next slide for me, please. All right, so today, to the meat and bones of what we're going to talk to is foreclosure prevention, right? And so before I dig into ways for you to avoid foreclosure by working with your bank, I want to talk about just payment challenges in general, right? So you see it's a QR code there. That QR code will send you over to our wellsfargo.com/home assist page. It's essentially a page where if you are running into any trouble, you can visit that Wells Fargo website, provide you enough insight and information in order for you to either directly connect back with the bank or help you make an informed decision, or even to connect you to a housing counseling organization. So very informative. But as you experience challenges, there are certain steps that do take place, right? So as we go through this, thank you. As we go through this, you'll see I will talk about 6 different scenarios. I'll talk about refinance, talk about repayment plans, I'll talk about modifications, deed and lose, short sales, and forbearance. Some of that terminology can be a bit confusing. So what I wanted to make sure that I did was carefully walk through every component, because out of these 6 things, these are the 6 pieces that can change your mortgage in one way or another, right? As you go through one of these 6 things at any particular point in time, there are some things that will happen and things you need to do as a consumer and as a homeowner. All right, so next slide for me, please. All right, and so as I go through this list, I'm gonna go from not much issues with paying the mortgage to I'm really having trouble paying the mortgage. So if you think about the threshold, I'm gonna go from everything's okay to I'm getting into trouble. All right. So just keep that in mind as I go through the duration of different options, right? So the first scenario I wanted to talk about was refinance. Really, refinancing is that happy phase, right? You're in your mortgage, you're doing great, and at that particular time when you originated your mortgage, you may have had a higher interest rate, right? Your interest rate that you got at the time may have been 7 or 8%, and then you find out a few months later that the rates are lower. Then it's a perfect time for you to re-engage with your bank and potentially refinance, right? So refinance is essentially replacing an existing mortgage loan with another mortgage loan under a different term and interest rate, right? So there's a lot of positives with that. It means you're paying on your mortgage. That means you're able to have good credit. You're able to get in a scenario where you can get a lower interest rate from a financial institution. So a situation that I can share an example of would be, rates are low, right? Right now, rates aren't as low as they were a few years ago, but just follow me here, right? Rates are low or lower than your current interest rate. A family has, been making their payments over the years on time, year over year. But at the time they closed their home, their rate was higher, right? It was about 7 or 8%. Now, the rates that we see at that particular point in time may have dropped to 3.5%, which is lower than their current rate. And they also have equity in their home because they've been paying on it. They're in a good neighborhood. They may have built a store outside of the neighborhood. Things are just in a very good space, right? So you're like, all right, let me get a lower interest rate, right? So there are a few goals with the refinance. As I mentioned, taking advantage of the lower rate. So if you get a lower interest rate, that means your payment actually is going to go down. And there are scenarios where you can free up cash that you can use to meet your other financial goals, right? So you can pull the equity from this property and use it to your benefit. It may also mean that you can pay less interest over the life of the loan, right? So there's a really good advantage around the rates being lower. You can change your loan term. So if you wanted to pay off your loan a bit sooner, you can actually shorten your loan term. You can also lower your monthly payment by refinancing to a longer term. So a lot of banks have options where you can refinance for 15 years or you can stretch it back out to 30 years, right? It's all dependent upon what you have an appetite for, essentially because your rate's going to be lower and you're probably going to have a lower payment. And I mentioned it, tapping into the equity, right? So with the cash out refi, you can use the available equity in your home to pay for home improvement projects or pay off higher interest loans like credit cards. So there's a lot of opportunity there. But remember, this is the place where it's all right, you're making your payments, things are good, and you just want to understand the rate. I know a lot of folks over the last few years, especially during the pandemic, were getting a refinance and a forbearance and a foreclosure kind of intertwined. So that's one of the reasons why I wanted to add refinance as one of the topics, so that way you understand that's kind of the happy path, right? So areas of concern is your credit score is a factor, right? And you have to understand that there's a cost associated with the refinance. And it's depending on what type of loan you have, there may be a cost associated with it. And essentially you might be starting over, right? You might be stretching that term back out, even if you paid over a certain amount of years, if you wanted to get a lower payment. So there's a lot of things that go along with refinance, but it's kind of on that happy path. If you don't mind going to the next slide for me. All right, so now we were on the happy path. Now things are getting a little shaky, right? And you're not necessarily running into foreclosure, but you're stepping and leaning into that direction. And this is where we really want to engage with our people to talk about, all right, what do I do now? Anytime someone's getting on a repayment plan, that's a sign. It's a sign that you may be running into some issues that may be impacting your ability to make a mortgage payment, right? So what is a repayment plan? It allows you to bring your mortgage current over a period of time, right? Usually up to 12 months. The repayment plan adds a portion of the past due amount to your bill for a period of several months until you're caught up, right? So it's essentially like you paying extra for a few months until you bring everything back up to date, right? So here's a scenario. A family has run into a hardship and they have a small business. Their small business unfortunately got closed to mandates from the COVID-19 pandemic. Nothing that they were doing, nothing around how their business was performing. It just so happens they were in a place where there were mandates and unfortunately they had to close, right? The family is still able to maintain their mortgage payments in the future, but it may be a tough next few months for them because they're not able to generate business, right? Now, that family can speak to their mortgage company and say, well, I can't pay this month, I can't pay next month, but things are going to be rolling back in 2 months, 3 months. And so essentially what will happen is they get on a repayment plan. That's more of a short-term hardship, but the repayment plan allows you to catch up without making any adjustments to your mortgage, right? So an example, if you see on the screen of a repayment plan would be if someone had an existing monthly first mortgage payment of $1,500, they get past due a few months, right? And so if you think about 2 months being past due, that's $3,000. And the number of months they would have to repay this back. So the bank would say, hey, if you pay this back in 6 months, your payment is going to go up, but you won't have anything due. So the new payment that will occur for the next 6 months would be $2,000. So essentially they will be adding $500 a month to your mortgage payment until you clear off the debt, because you'll be paying off the difference in extra increments of payment, right? So essentially that's a short-term hardship. That's really impactful for someone who has a business or they have employment where they're generating consistent revenue month over month, because you might have some reserves to pay a little extra, right? But keep in mind, this is a sign that you're maybe running into some trouble. So some areas of concern with the repayment plan: your credit may be impacted due to the late payments, right? And then you also, think about it, you're paying an extra $500 a month for 6 months. So sometimes our budgets aren't set up like that, right? The way my checking account is set up, I can't pay the extra $500. And that's understandable, but it's an option for you if you have the ability to do so. All right, if you don't mind going to the next slide for me, please. All right, so as I mentioned before, refinance, good space, repayment plan, signs of having some trouble. Modification is, all right, I'm in trouble. I'm in trouble, I need some help. I really need to get some advice on how I can figure out how I'm going to pay my mortgage. So essentially, what is a modification? It's an agreement between the homeowner and the mortgage company to change the original terms of the mortgage, such as the payment amount, the length of the loan, the interest rate. And in some cases, when your mortgage is modified, you can reduce your payment so that way it can be a more affordable amount. That's essentially what the modification is for. So I created a scenario, right? So just think about this as a scenario and as an example. There's been a lot of changes for the family since Mr. Smith lost his job, right? So the borrower lost his job. Savings have kept the family afloat. So Mr. Smith was able to save and save and save. Since he's been out of work, those savings have helped him and his family maintain their bills. But the savings have now diminished, they're depleted. Luckily, Mr. Smith has regained his employment, right? He lost his job, didn't have work for a few months, used his savings to keep everything afloat, but now he's back working again. But his current job pays significantly less. So unfortunately, the current mortgage payment that he has is no longer affordable for him and his family because he had that pay cut, and he's no longer able to maintain that mortgage based on his current salary. And now the families fell behind on the mortgage payment. So this would be a common scenario for a lot of folks. Maybe it may be a family member, maybe yourself. Somebody's gone through this before. My family members have gone through this before. And so I understand how critical it is when you are scrapping and pulling savings, trying to make sure that you pay that bill, because you can get behind on your credit card, you can get behind on your car, but will you lay your head in your home? It's really important. It's really important that you find a way to pay that bill, and the stress starts to compact, right? There's other things that may be going wrong, and the mortgage is kind of the ceiling that's crushing down on you. So essentially, it's what do I do, right? A lot of folks, they don't know how to engage once they get into the situation. They may talk to a family member, they may speak to their pastor. One of the reasons why we're doing this faith-based work, right, is we're assuming that people are coming to their faith-based leaders to ask that question, I need the help, what do I do? Right, so here's some good steps if you or someone you know is facing a hardship, right? Contact your mortgage company. That's really important. It sounds cliche, but the reason why you want to contact your mortgage company is because your mortgage company can actually put things in place to stop any further activity that will put you down a path of foreclosure, right? So that's why it's important to contact your bank. You shouldn't wait to contact your bank, because your bank can start to notate your account and say, Mr. Smith called. He said he's running into a hardship. We're going to start the process of evaluating his loan for a modification. So the bank is aware. They're aware that you need the help. Now, this doesn't accelerate anything when you call. This isn't a black eye on your behalf if you call. It isn't a slap on the hand if you call. Calling is important, right? Call your mortgage company. Tell them you're having a problem paying your mortgage and you want to learn more about modifying your loan, right? Every mortgage servicer does this. So don't think about this specifically as Wells Fargo. I'm just speaking on behalf of mortgage servicers and banks. All banks do this. All mortgage servicers do this. So if you don't have a mortgage with Wells Fargo, it's okay. All banks are doing this, right? And so another scenario that we think about as far as the steps facing the hardship is you got to make sure that you're explaining your situation, your current situation, your hardship. You got to be ready to talk about what's going on so that way you can get the help you need. And as you're talking to your mortgage company, clearly outline the hardship that you're facing and explain why you're having trouble making your mortgage payments. And you really need to distinguish if it's something short-term or something long-term. And the reason why you need to differentiate between the two is because the short-term problem may not be something that can require a modification. It might be a repayment situation where, if you think about my previous scenario, if it's short-term and you get put on a repayment plan, you're just paying more for a short period of time until you get caught back up. But really, if it's a long-term problem, it means that changes need to be made to the mortgage in order for it to remain affordable. So that way you do not get back into trouble in the future, right? Your mortgage company will need to understand the reasons why you fell behind, so that way they can understand how to best support you. Now, I say that around sharing your information with banks, but you also want to make sure you're sharing your information with the housing counseling organizations you might work with, your faith-based leaders, any type of connective point, connective tissue that you have in your community. You want to be able to outline your situation. And sometimes that's hard for us to show our dirty laundry, right? But you really need to make sure you're sharing your current situation so that way you can get the help you need.
Rulon, can I just add something to this?
Sure.
One, there are a lot of folk who feel there's a prideful thing. There's shame in asking for help. All right, let me tell you about pride. Pride is a funny thing and has a funny dynamic. Pride will get you put outside. There is no shame in asking for help. And I think we have to change our mindset and our perspective and how we look at our relationships with our servicers and the banks with whom we have mortgages. I think as soon as we get the mortgage, it's almost perceived to be an adversarial relationship, like they're trying to get me. And for that reason, a lot of people avoid interacting with their servicer and their bank for fear of some kind of blemish or some kind of activity that's going to get them out of their home, when actually the opposite is the case. We need to see this as a partnership. Think about it like this. Banks, it costs the bank money to foreclose. I'm gonna say that again. It costs the bank money to foreclose. They would much rather have you contact them earlier versus later, because there are more options available to you to remedy your situation. They just need to know what you think your situation is. Is it short term? Is it long term? And once they have a clear understanding, they have a lot of different products and services available. They just got to pick the right one to meet your need. And, you know, a lot of times people run around avoiding interacting. They get a correspondence, hey, talk to us, we're late. And all of a sudden that piles up. People don't even open it. And that is the worst thing you can do, because so often, I remember agencies, we talk a lot and they say, man, if so-and-so would have just contacted us just 5 days earlier, this option, which is so much better, would have been available to them. And instead, what we do is oftentimes we put our head in the sand like ostriches, hoping the bad times will go over. I got news. Unless you play an active role in managing that bad time, it's not going to blow over. It'll just get worse. So call early, call often, and view it as a partnership. And Rulon, if I've said anything wrong, you can slap me around here.
No. You are spot on. And thanks for bringing that up, because, man, there is a lot of misinformation about what happens once a loan is no longer being paid. A mortgage is no longer being paid. Herman, to your point, the banks, they're losing money each time and each day because essentially we're paying things in order to make sure that the loan is maintained. So even though a homeowner may not be paying their mortgage, the servicer is still paying the taxes, the insurance, still making sure that the home is secure. And so I remember during the housing crisis, I would speak to a lot of community members and they would tell me, well, you know, the banks want to foreclose on me. And what I would reiterate to Herman's point is the banks actually want to make sure that you're able to maintain that loan, because if you think about it, and you know, we're all friends on the phone, we're family on the phone. So I'll be brutally honest with you. If you're in that home, you're paying interest on your mortgage. Those interest payments go towards the bank. If you stay in that home, you're paying interest. So from a transaction standpoint, the bank actually is making money as you are paying your mortgage, because it's collateral for a loan and you get to sleep in that location that becomes your home. If you foreclose, or if you are no longer in that home and that mortgage isn't getting paid, the bank actually spends on average of $2,500 per defaulted loan each month. So if you think about maybe 10% of Wells Fargo's mortgages defaulting at once, you know, that's over 50,000, actually 500,000, you know, that we have to pay 25,000 a piece for. So it's very complicated to talk through, Herman. I'm really happy that you mentioned that. Another piece is documentation, right? When you go through this, you have to be able to show documentation. And that was one of the hardest things during the housing crisis, is gathering up all of this paperwork, right? Gathering up your tax returns, gathering up your pay stubs, gathering up a hardship letter. How do I write a hardship letter? Should I say a lot? Should I say a little? What should I do? Should I say I can pay my bills, not pay my bills? Should I tell the truth? Should I lie? It's a lot of scenarios when it's documentation gathering. And it's important that we talk about the importance of basically painting the financial picture. So a good next step would be to gather up your financial information. Make sure that you have that basic financial and loan information on hand, like your loan number should be on your mortgage statement. Make sure you're keeping your mortgage statements. If you do online banking, it's right there on your phone or through on your laptop. But if you are getting physical statements in the mail, make sure you know your loan number. When you're gathering your pay stubs, right? The bank's going to ask for pay stubs. They usually ask for a month. So if you get paid weekly, they're going to need 5. If you get paid bi-weekly, they're going to need 3. And the reason why they do that is so that way they can look at your income and actually calculate how much money you can afford in a mortgage payment. So there is a thing called debt to income, as they're looking at how much money that you make versus how much money that you spend. And that mortgage payment is within the expenses, and they need to make sure that when they make changes to the mortgage that you can actually afford it. So that way you're not running into another hardship in a year or in 2 years, right? But then also, if you are self-employed or if you have a small business, creating a profit and loss, right? And you don't have to have a CPA to do this. You don't need to go to an attorney. You can go to a HUD certified housing counseling organization, preferably someone in NFCC's network, and then have them sit down with you and help you with writing a profit and loss, right? A letter of explanation, right? Explaining why you got behind and how you got behind. It's essentially a hardship letter. Hey, this is what happened to me, right? Tax returns. So all of these different items are important. So just to run down the steps again, call your bank. Call your bank, have that conversation. Be open and honest about your current situation, because these banks really want to know how we can support you, how we can help you. And make sure that when it comes down to the documentation process, which is probably the most tedious process throughout the modification process, that's probably the hardest part, is gathering up the documentation. You just make sure that you're collecting your documentation. And if you do have the ability to meet with the housing counseling organization, they'll help you walk through everything. But also your bank will give you a packet that explains every document you need in the form of a checklist. So it's all right, pay stubs, got it. Bank statements, including every page, even that last page that doesn't have any information on it, if it's 5 out of 5, all 5 pages. Tax returns, all of your schedules, everything. Check that box, right? And so banks give you a checklist, but if you need that help, as I mentioned later on in the slides, I'll talk a bit about housing counseling as well too. If you don't mind, can you go to the next slide for me, please? Thank you, my friend.
Rulon, could I just add that
Sure.
if you get denied for a modification, please have hope, everybody. Work with your counselors, work with your loan representatives, and please resubmit.
Good point. Great point. So the amazing part about working with your mortgage company early is if you do get denied for a modification, just because let's say you have too many expenses to the point where even if they made adjustments to the mortgage, it still is not affordable for you. It's not okay, now you got to get out of the house. It's not like that. It's at the moment, we're not able to find an affordable payment for you. When we do, when we can, reapply. So to your point, yes, reapply. The good thing about the mortgage modification is if you are denied, your mortgage servicer will provide you a letter explaining why you got denied. And if you're working with organizations that are HUD certified housing counseling organizations, such as NFCC's network, they can kind of explain to you what the steps are in order you get back on track. Maybe it's, hey, you forgot to show this income that you have. You got a small business on the side. You say, you know what? I'm not even going to add that. They'll probably think I make too much money. Add that income because it's important. It's important for the bank to be able to calculate how much you can actually afford. And the way they do that is by changing the terms of the mortgage. But if you don't have enough money and too many expenses, there's only but so far they can change the terms of the mortgage to make it affordable for you. So keep it. That's a very good point. So keep that in mind. Herman, did you have something?
Yeah, I want to add. So here's the thing. I said, I talked a little bit about pride. Replace pride with determination. And, it's something that you want. It's something that you need. What you need to also consider is you need to do a temperature check. And by temperature check, I mean this. You need to determine, are they as committed to their no if you get declined as you are committed to getting a yes? So you got to apply or reapply 3 or 4 times. Hey, go ahead and do that. Rulon has been very kind and gracious, and he's talked about HUD certified nonprofit counselors. Think of them as a coach, a personal coach who is familiar with the terms, how banks work, the lingo and whatnot, and they are your consultant, your coach to help you navigate the processes involved with it. And they'll also keep you accountable to achieving the goal that's going to create a better financial outcome for you. So you don't have to do this alone. You can use a HUD certified nonprofit counseling agency to help you navigate this process and be empowered. And again, you want to make sure whomever is as committed to their no as you are committed to getting a yes.
That's right. And that's important, right? That's really important. Fear in this scenario makes it very difficult for you to overcome the obstacle. Unfortunately, a lot of folks that are going through this for the first time, the first thing that they do is they wait. They stop looking at the mail. They stop picking up the phone when they see an 800 number call until it's the point where it's a little too late. And then at that point, the opportunity for you to reapply may go away. And we don't want that to happen. So as soon as you know that there's a hardship, please contact your bank or contact a trusted advisor because it's extremely, extremely, extremely important. Tanya, you got something?
You mentioned the documentation.
Mm-hmm.
Is there some place where we can find a list of what is the documentation that's needed?
Yeah, so there's a few places. So obviously I'll refer folks back to the wellsfargo.com/home assist. So Wells Fargo does have a list on their website. Other banks should have lists on their website around what documentation is required. But when all else fails, you can go to Freddie Mac or Fannie Mae's website, or even the CFPB, Consumer Federal Protection Bureau, their website, because they'll be able to provide context. The documentation is standardized. So there's not going to be an additional document that one bank has that other banks don't have, right? And usually it's a checklist that is standardized, but not complicated because it's based upon what you can provide as a mortgage customer. So if you're a W-2 wage earner, meaning you're getting the pay stub from a business, they're not going to require you to create a profit and loss because you own a business somewhere, right? You need pay stubs and then you need tax returns. The reason why you need tax returns is so that way the bank can really understand if there are other forms of income that are out there that you may have forgot to include, that we can ask questions. Hey, are you still getting this? You had a boarder, someone was living with you. Are you still getting that contribution there? Hey, you had a small business here. Did that go away? So they're going to be questions that are going to get asked. But to your point, that's a very, very good point. The checklists are standardized and they're out there. You can visit Wells Fargo or your mortgage servicer's website, and they should have a breakdown of all of the lists. When you're going through the modification process, they send you a physical packet. And if you have a mobile app with your bank, they give you the documentation on your bank as well too. Try to make it as easy as possible for you to go through it. But we all know sometimes paperwork is hard. So as I mentioned, if you do have a housing counseling agency in and around your area, please give them a visit. They've seen these documents thousands and thousands of times, right? So they are experts and they'll help you through the process. They're indifferent. They'll say, hey, you know what? You need a little bit more income, all right? You have too many expenses. You listed these credit cards, but you haven't paid these credit cards in 6 months, right? You don't pay any credit card payments because you haven't paid them. So don't say you have $800 in credit card payments, because what that'll do is show the bank that you're not able to afford your mortgage. But ultimately, you stop paying those credit cards because you want to keep your home. So there's a lot of things that are there in the conversation around getting a modification. But to your point, documentation is key.
Does it vary from state to state, or is it the same?
It is the same. Now, there may be, the only thing that may be different is depending on the taxes that you have to file, right? Depending on what state you live in, right? So there may be some additional schedules, or there may be something else there that you have to, but usually it is streamlined from state to state. It's based upon the consumer and their occupation. So how they generate revenue, because essentially they want to see how much money you make, how much money you spend. Between those two things, we can come up with a math equation that will say you can afford X, because we saw these two things in real time. And that's really what it's about. So it is streamlined, but the biggest part is showing the income that you make and the expenses that you have.
Thank you for breaking that down.
Oh, no worries. Really good question. All right, so this is an example of Mr. Smith's situation. So if you remember, lost his job, had the depleted savings, he's back working again, making a little bit less money. So before he lost his job, Mr. Smith was making, about $5,500 gross. So this is before taxes, gross, right? His income has went down by $1,300 to $4,200 a month gross, right? He got behind on his mortgage payments. And so before he reached out to the bank, he owed $9,600. He had an interest rate of 6%. He had been in that home for a few years, right? His principal balance, so how much he owed to the bank, was $214,000, right? And so at the time, his mortgage payment was $1,600. So he ran into that hardship, got back on track as far as his employment, but he's making a little bit less now. So instead of that $5,500, he's making $4,200 now gross. So that's not counting all of the deductions that he has from his paycheck. So he may only be taking home $3,000. So the question would be, is $1,600 affordable? Probably not. So what the bank is able to do is they're going to look at a scenario and say, all right, there are a few ways that we can make his payment get lower. We want to get his payment down to about $1,200, $1,240, because we know, based upon his $4,200 that he gets gross, that this is affordable for him. We see that 30% of his income is going towards his mortgage payment. From a bank's perspective, that is the spot that we want to hit, right? And the way we do that is we make changes to the terms of the mortgage. So as I mentioned, he had a 6% interest rate, but the bank has the ability to lower the interest rate to a certain percentage. And the reason why you lower the interest rate is because it will create a lower payment. So that's one lever we press. Second lever we press is, all right, Mr. Smith has 288 months left on his mortgage. What happens if we stretch this back out to 30 years, right? That gives us more payments that will be made over that time frame. We press another lever. That lever makes the payment go down a little bit more. The third thing that they look at is, all right, what happens if we take the amount past due and roll it back into the loan. With the term being 30 years again, and then the interest rate dropping down almost half, it will create a payment of $1,240. So now that's affordable for him. So now Mr. Smith, as it stands today, doesn't have any mortgage payments past due, has a lower interest rate, has a lower payment, but he has an extended term and he has a higher principal balance. But what we did is we just rolled in those payments that were behind back into his mortgage. All right. And so here are a few benefits of the modification. It helps you resolve your delinquency, right? It helps you get back on track. A lot of times you're reducing your monthly payment. There are times where someone gets behind too far. We talked about making sure that you're communicating with your bank, right? If you get behind 2 years, year and a half, 3, it might be so far gone that the amount of money that we have to roll back into the loan to help save the home may not create a lower payment, right? The payment may be $10 lower, right? Not much change, but what happened is we were able to take whatever's past due. And I've seen scenarios where people are behind $150,000, $140,000, and their loan amount is only $300,000, $250,000. So how do we save that person? How do we help that person? And so when we think about the payment reduction, not all modifications are going to equal a reduced payment. The payment's always going to be a bit lower than the original payment, but there are scenarios where in order to save the home because of the amount past due, that the payment may be close because it's deemed about affordability. That's one of the reasons why we're expressing the importance of speaking up as soon as you can. You don't want to wait too long to the point where the bank doesn't have many options in order to make that payment affordable for you. Another benefit is you're changing the original terms of your mortgage permanently, so it gives you a new start. Lowering that interest rate, stretching that terms out, gives you a fresh start, right? So it's like getting a brand new mortgage, essentially, fresh start. A modification is less damaging to your credit than a foreclosure. A foreclosure can impact your credit for a long term. The modification does slightly impact your credit, but at that point, you're correcting your scenario. But think about the months where you weren't able to pay, your credit's getting negatively impacted throughout that process. So getting the modification helps you start getting back on track with making those payments month over month over month. And then the most important part, you get to stay in your home and avoid foreclosure, right? So it's really important that you contact your bank. It's really important that you are clear about your situation. Express your hardship, right? And it's really clear that you have all your documentation, everything ready to go. And then ask for help if you need help with the documentation. You know, make sure that you have a trusted advisor that you can talk to. Hey, should I send this in? Now, what am I missing? So that way we can really help you in this scenario. All right, Eric, if you don't mind, next page for me, please. All right, so we talked about a modification, but the term forbearance was a big topic during the COVID-19 pandemic. And so forbearances are something that have been around for years. It just so happens that the pandemic has really highlighted that term. The term forbearance and foreclosure are so close, right? People usually get the two terms confused. And one of the things that I did during the beginning of the pandemic in 2020 is I just went across the country explaining what forbearance is. And I was surprised about how many people thought it was related to foreclosure. Essentially, what a forbearance is, it's a temporary payment relief in order to help homeowners that may deal with short-term issues such as a job loss or illness or a recent disaster, divorce, death of a wage earner, or other unique circumstances. And essentially, your payments are suspended for a portion of time. They're not waived. They don't go away. They are suspended. And so here's a scenario that I think would be important for us to go through. So a few years ago, COVID-19 pandemic hits the Harris family, hits them very hard, impacts them financially. Both Mr. and Mrs. Harris are temporarily out of work due to a furlough, right? Nothing that they did that caused them to not be able to work. They just had to go on a furlough because that's what their corporation required of them. Ms. Harris wants to continue to make her mortgage payments, but she's unsure when she'll go back to work full time. She knows that this won't be something that's a long-term issue, but She wants to have a bit of relief just in case that furlough takes longer than expected, right? So what are the benefits of a forbearance? So it does lower or temporarily suspend your monthly mortgage payment. Forbearance does give you a time to improve your financial situation, and it helps you get back on your feet. A lot of folks during the pandemic were using this essentially as an insurance policy. So they will request a forbearance through their bank, but continue to make their mortgage payments in order to make sure that they don't get hits on their credit. So whenever you're in forbearance, you do not have any fees that are associated with you being past due. You don't have any negative impacts on your credit. You just have special language on your credit that basically says that you're getting assistance on your mortgage, and there's nothing that is impacting you. And if you choose to not make those mortgage payments for that particular period of time that you're in forbearance, you can work with your mortgage servicer once you're ready to start making payments again to decide how you want to pay that money back. Because as I mentioned, it's not waived, it's just suspended, right? So as I mentioned about repayment, so repayment is essentially once the forbearance ends, those payments that you set aside, they're going to be due. There are a few options on how to manage those payments and avoid paying back a lump sum. During the pandemic, a lot of people were reacting to the fact that they may potentially have to pay 4 months of payments all at once. But essentially, that's an option for you, but it's not required of you. It's not the only option, right? Banks are going to do that as a first source because as they're sending you a mortgage statement, the mortgage statement you get will show that you are X amount past due. They're going to give you the option, hey, do you want to pay this up to date? That way you can get back to your regular payment. As a mortgage customer, what you can do is say, I'm not able to make the full payment now, so I want to set up a repayment plan, or I want to defer the amount to the end of the loan, right? When you defer the amount to the end of the loan is essentially you taking those 4 months and you rolling it to the end of your mortgage. Depending on what type of loan you have, that can be a silent second lien that doesn't accrue any interest, or it can just be it could be 4 payments that are tacked back onto your principal balance, right? So you don't have to pay those back until the end of the loan. A lot of times if the hardship is a longer situation where it isn't short term, you can still modify your loan as well too, even after you go through that forbearance period. I mentioned a bit earlier that the fees are waived. So during forbearance, mortgage servicers will normally suspend all late fees associated with the loan, right? So when you get on forbearance, you can continue to pay if you like, right? But you're not going to get hit with any late fees. So if you're paying now, instead of paying on the 1st of every month, you're paying on the 20th of every month, you won't get a late fee on the 15th day. If you're going, 30 days late, there's limited impacts to your credit. So there are some positives there. Areas of concern, as I mentioned, the payments they don't disappear. They don't go away, right? So there is still payments due. They're just set aside or suspended. You still have to make the decision on what you want to do with those payments when you're ready to start making your mortgage payment again, right? There are minor impacts to your credit, as I mentioned. It's not necessarily a hit to your credit score, but there is special language in the credit report that gets removed once you start making your payments again. All right. All right. So that was forbearance. Next slide for me, Eric. All right. Short sale and deed in lieu. So this is, all right, we're going through foreclosure. We can't modify the loan. Nothing's worked. What do we do to avoid foreclosure? Right. So a short sale and deed in lieu. Now, these terms aren't used as often as they were a few years back, right? People are doing everything they can to make sure that they can pay their mortgage and make sure that they're able to maintain in their homes. But there was a point in time, specifically during the housing crisis, where someone was like, all right, I just can't deal with going through this modification situation. I'm just going to turn around and short sell this. So a short sale is the process in which the mortgage company works with that homeowner who may be behind, right, to sell the house by a real estate agent prior to the foreclosure sale. The sale price is essentially short of what is owed to the mortgage company. That's why it's called a short sale. You're selling it for less than what you actually owe, right? Now, the term deed in lieu it's slightly different. A deed in lieu is a transfer of the title from the homeowner back to the mortgage company to satisfy the debt, right? And also to avoid foreclosure. So a deed in lieu, right, is usually a voluntary turnover, right? Giving the keys back to the mortgage company. Essentially, a deed in lieu and a short sale, there's a big difference between the two. In a short sale, it's the difference between the mortgage balance, so what you owe, and the sale price. In a deed in lieu of foreclosure, the difference between the mortgage balance and the market value of the home is what is the difference of that transaction. So most states allow lenders to seek judgments against homeowners for that difference, and that's called a deficiency balance. So as you are kind of going through that, you still may owe money as you go through a short sale or a deed in lieu because you didn't secure or complete the whole debt transaction. So both a short sale and a foreclosure have a negative impact on your taxes, credit score, credit report, and future ability to buy a home. But a short sale and deed in lieu is still better than a foreclosure. The foreclosure is the most impactful piece of all of this. So we have to do something to help avoid it. Short sale and deed in lieus in today's climate, short sales and deed in lieus have been less frequent over the last few years due to low interest rates, rising housing costs, and lack of available inventory. So you don't see a lot of folks going through that short sale process. They're trying to do everything they can to stay in their home. And as you think about how the market's been over the last few years, it's been up and down. It's been a roller coaster for everyone. But if you think about the demand for housing now, housing costs are higher because we have less homes available. A lot of people aren't going through the short sales. The short sales actually created opportunities for people to get back into home ownership because there was available inventory. Unfortunately, there's not as many short sales or deed in lieus, and there's not a lot of foreclosures that are happening nowadays as well either, which means that people are actually taking action and making sure that they can get help and help when they need it. During the pandemic, it was really essential that homeowners were able to reach out to their bank and have that conversation around how they can get the help. I'm happy to say that a lot of people took advantage of that support that was out there. And the result is we see less foreclosures today than we see a few years ago. Next slide for me, please. All right, so I want to transition briefly to talk about non-bank assistance. So essentially, there's assistance across the country that comes from the federal government. It comes from local government. It comes from your city, it comes from your county. There's a lot of programs out there that are mortgage assistance-based programs. One in particular is the Homeowner Assistance Fund. Now, this was created a few years back by Joe Biden's American Rescue Plan. So a part of the American Rescue Plan back in 2021 was to help distribute $9.961 billion to all states across the country, right? Including territories, Department of Hawaiian Homelands. And so the goal of that fund was to make sure that we can support homeowners that may be impacted by the COVID-19 pandemic. So these funds are going to be around until September 2025, so another few years. And so this is how the Homeowner Assistance Fund kind of came to be. So a few years back during the housing crisis, there was relief from the federal government to 18 states that helped homeowners who may be impacted by potential foreclosure. Essentially, what the Homeowner Assistance Fund is, it's an expanded version of that program where all states are involved, where U.S. Treasury has allocated money, a minimum of $50 million per state, to help homeowners who may be impacted. And so how does that work? How is it distributed? So the Homeowner Assistance Funds prioritize that type of assistance for homeowners who are experienced that financial hardship in an effort to make them whole again, help them prevent any type of mortgage delinquency, any default. But essentially, it's homeowners who have experienced financial hardship after January 21st, 2020. So essentially, pandemic assistance. Expenses that are covered for this type of a program would be your mortgage payment, it could be your utility bills, it could be delinquent taxes. And so each state has a different approach to how they use the program, but essentially it's around payment assistance, payment support, reducing your principal balance through some of the funds through the state. And as I mentioned, some states have as high as 500 million, 600 million, to the tune of thousands of families that can get that help, right? And so it's really important as we think about a program like this, it's not based on your bank having the program available, it's based on your state. So what would happen is if someone's in Pennsylvania and they're running into a hardship and they're thinking, okay, I need to talk to my bank, but the state of Pennsylvania does have money available, they would go to the state Pennsylvania Housing Finance Authority. They would apply online for this program. At that point, the state will work with your bank to say, all right, your homeowner wants to get assistance through our program. Let's go ahead and verify who they are. At that point, the state will work directly with your bank to apply payment to your loan to cover any amount of money past due. Now, this program, I really simplified it, but the program does have requirements. So state by state, you have to look at what your requirements are. But essentially, the goal is to try to help as many people between now and September 2025. Next slide, if you don't mind. All right, go in the other direction. So I actually created a website, and the website, this QR code should still work, but if it does not, the website is wellsfargo.com/homeowner assistance fund. wellsfargo.com/homeowner assistance fund. All right. So as I mentioned, with this program, all 50 states got money, including DC, Puerto Rico, Guam, American Samoa, Virgin Islands, tribal entities, Native American entities, Department of Hawaiian Homelands. This money has been dispersed equally. So we created a website. We influenced some other banks to create a website as well too, that you can go to, select your state, select the application process. Some states have gone through this process for the last year and a half, and they've suspended some of their programs because it just had so much interest, but there's a ton of money left. So if you are running into any issues, you're not able to get a hold of your bank, please reach out to your state to see if they have funds available for you to get that assistance through the Homeowner Assistance Fund. All right, next slide for me, Eric. Thank you, my friend. All right, as I mentioned earlier, housing counseling, right? So HUD certified housing counseling is extremely important. So if you are dealing with issues and broader financial challenges, right? Because sometimes the mortgage payment, being delinquent on that, getting past due on that is just a symptom of a bigger problem. Housing counseling, to me, you know, I tell Herman all the time, they're doing the greatest work ever, right? It's just so important that housing counseling is in place, because sometimes that housing counselor needs to be your therapist, needs to be your financial coach. Sometimes they're everything for you, right? They can have conversations with you about your finances that banks can't, right? You know, I've been working for Wells Fargo for 17 years now, right? And it's amazing how important housing counseling has really impacted positively a lot of our homeowners, where I have a conversation with the customer about their situation, and sometimes I wish I could help you, but I'm not able to. So first thing I do is, have you ever worked with a housing counseling agency before? Do you know how to get in touch with your local housing counseling agency? Here's the website, hud.gov/housing counseling. Type in your zip code, find a local organization that can help you, all right? Keep in mind, avoid anyone who asks for a consultation or charges you money to get assistance, because it is free working with a HUD certified housing counseling agency. If someone is coming to you saying, if you give me $1,000, I can help you with your mortgage, please reach out to a housing counseling agency, because this assistance is free. It's free from your mortgage servicer. It's free through housing counseling as well too. So keep in mind, if you want to find an agency near you, please visit hud.gov/housing counseling, and you can put in your zip code and it'll disperse a list of organizations that are local to you. Latanya, did you want to share something? I saw you pop up.
There is a question in the chat for you.
There we go.
Now,
right.
Herman told everyone there are no silly questions, but this person said, this may be a silly question. Are deferments in the mortgage world fairly new? And there are no silly questions. We appreciate your questions.
No, that's actually a very good question. That's a very good question. So typically when you think about like a deferment, you think about an auto loan, right? So that's one of the things that auto loans have the ability to do, is if you do have an auto loan and you get behind a few months on your auto payment, you can say, all right, I want to defer a few months and put it to the end of the loan. It's an installment debt, so you can just extend the term. Mortgage companies, that's not their first preference to defer something to the end, because really, if you think about the interest associated with you making your payment each month, that bank either wants to help you modify the loan or help you cure the delinquency. So essentially, it is fairly new. It is fairly new to the point where it's an acceptable form of trying to make sure someone is able to get on track. COVID-19 really showed a lot of banks the importance of having multiple programs. Banks always had forbearance and payment deferrals as an option. Usually a bank, if they had a large amount that was past due, they would do a set aside. A set aside is essentially a deferment, right? Because you have to pay it at a different point in time. It doesn't go away, but you can pay it later. It's just different terminology. When we think about a deferral, we think about like an auto loan, right? But the COVID pandemic has allowed banks like Wells Fargo and others to say, all right, maybe we should try this short-term assistance. Maybe we should take the amount that's left over when someone's able to get back on track and defer it to the end. So placing it at the end of the loan, so that way that person can continue to make their payments. So that's a really good question. That is not a bad question at all. That is a very, very, very good question. So to answer it, yes. So it's from an industry standpoint, the ability to set payments aside has been around, but really the term deferral is more synonymous with what we've been going through during the pandemic and forbearance. So I hope I answered that question for you.
Thank you.
Okay. I think I have one more slide, Eric. Let me see. All right, so if there are any questions, please feel free to ask, but I'm actually going to run through a few questions I feel that people ask the most, and I'm going to answer them for you. So that way, if you might have this as a question or something that's kind of, you know, tinkling in your brain to say, all right, let me ask this. Let me see if I can tackle it for you through these questions. These are kind of like frequently asked questions that we get from homeowners. So we try to do as many surveys as possible to ask homeowners, you know, how they feel about the process, if they've ever been impacted, what was the hardest part, what questions would you ask if you went through that process again? So one of the things is, will the foreclosure process begin if I do not respond to my mortgage servicer's notices regarding missed payments? So the answer is no. The foreclosure process won't start just because you don't answer, but you have to keep in mind that the longer you wait, the closer you are to potentially being in foreclosure. Certain states have foreclosure timelines that may differ. If you're in a state that isn't a judicial state where you don't have to go to court, you might have a longer period of time before your foreclosure starts. Whereas to the adverse of that, you may be in a market or in a state where there is some type of a judicial court system. Usually those foreclosures move a bit faster because there's a process that's in place. So it's irrelevant either opportunity for someone to foreclose on you if you don't speak up, right? So make sure that you are engaging with your mortgage servicer. Responding to any type of notices from your bank is a sign for you to call them. Avoiding them could potentially put you down the path of foreclosure. But to answer that question, foreclosure doesn't start just because you didn't respond. It will start at some point, but you not responding just prolongs the issue. Next question is, should I contact my mortgage servicer if I've waited too long and my property has been referred to foreclosure? Answer is yes. Contact your mortgage servicer immediately. We just heard an example of someone that's waiting too late, right, to get that help. Do not wait too late. You can get help all the way up until the day before a foreclosure sale date. So that means call your servicer. If you do get behind on your mortgage, do not wait. Call your servicer, work with the housing counseling organization, work with your pastor. Say, hey, I need the help. Who do I call? When do I call? Call now. So contact your mortgage servicer, even if you've been referred to foreclosure, because there is still time for you to get the help. Next question is, what counts as a hardship? Anything that tapers your ability to make your monthly payment. So that could be job loss, it could be health issues, illness, divorce, death of a family member. Usually those situations where you're not able to make your mortgage payment because of something that has impacted your life. Specifically, job loss is the highest actual issue that we run into as far as a hardship. Job loss is number one. I would say illness is number two, because if you're running into a situation where you're taking care of your mother or father, or if you have a child that may be sick or ill, and then you have to use some of that money to pay a deductible, or you have to use some money to pay for a hospital stay, or let's just say you're out of work because of an illness, then that's usually where we see a large hardship. So, what counts as a hardship? Talking to your mortgage company and explaining your situation. If you're not able to make your mortgage payment because of something that you can't control, or if there's something that was out of your control, but essentially you're back on track, then that counts as a hardship. So make sure that you're talking to your mortgage company and sharing your circumstance so that way they can help you out. What documents will I need to fill out during my mortgage modification review? So we talked a bit about going to websites and looking at the checklist, but essentially it is your pay stubs, right? If you're a wage earner, some pay stubs. If we're getting paid weekly, you need 5, because that is 30 days worth to a month worth. If you get paid bi-weekly, you need 3 pay stubs, 3 consecutive pay stubs, hopefully the most recent, right? You don't want to give a pay stub out that came out 2 or 3 months ago. You want to get something for the last month and a half or so, right? So that way they can get a true understanding of how much you make. Also, if you are self-employed or if you have a small business, a profit and loss. Profit and loss is essentially how much money you make on one line item, how much money you spend at your business for the next line item, and how much you pay yourself. A bank will take the number in which you pay yourself, or the number that's left over if you're self-employed after your expenses, and use that as your income, right? Also, tax returns. Reason why we use your tax returns is so that way they can understand how much money you've made over the last year. And if you don't have a copy of your tax returns, there's a document called the 4506T Easy form that you can fill out that gives your bank permission to run your tax transcripts. So that way you don't have to worry about finding all of your schedules. The bank will actually get it directly from the IRS. And then the most important thing is a hardship letter. Hardship letter tells the story about why you need the help. Essentially, that will allow the bank to understand how they can support you better and what adjustments they need to make in order to make the mortgage affordable for you again. All right, next question. Where else can I get information? So from your bank, from amazing organizations such as NFCC and their network. So HUD.gov/housing counseling, very important. You put in your zip code, you can find a housing counseling organization. The majority of housing counseling organizations across the country are certified by Housing and Urban Development. So they're federally certified. So they know their stuff. They had to go through training, strenuous training to make sure that they can get to where they are now with providing the right type of information. So if you can't reach out to your bank, or if you're nervous about communicating with your bank, reach out to your pastor, reach out to a housing counseling organization, make that connection so that way we can get you the help. Last question. If I work with a third-party counselor, can I authorize him or her to speak for me? The answer is yes. You can fill out an authorization form that allows the third party or the housing counseling agency to speak on your behalf. So that way they can have that conversation with your mortgage servicer, because if it gets a little bit too technical, we don't want the homeowner to be frustrated about the process. We don't want it to be a daunting task. You already have enough stress as you're dealing with your monthly mortgage payments. We want to make sure that if a housing counselor or a third party is working with you, that they can speak on your behalf. So a housing counselor, one of the main protocols that they have is when they're working with homeowners is they ask that question, hey, do you mind if you sign this letter of authorization? And that way they submit that to the mortgage servicer. And so that housing counselor can call on your behalf and ask the question, what's the status on the loan modification? What documents are we missing? Can you give me an explanation on why this customer was not approved for modification, so that they can speak on your behalf as a professional? So these are frequently asked questions. I'll pause there, see if there's any questions from anyone on the chat. Herman, I don't know if you guys have any more questions, but your questions were really good. It kind of helped me roll through everything. So
thank you. I appreciate it. Well, first, I'll see if there's any questions from our attendees, but I got a list of things to cover, and I'll give it a little bit, but here we go. Do the banks mind if the homeowner calls with a HUD certified nonprofit counselor on the line with them?
Good question. Good question. So what will happen is if you call, you just have to give verbal authorization for that housing counselor to be on the line with you. The person that's working for the particular bank should explain that that housing counselor just needs to provide in writing authorization, and they put that actually in the homeowner's file. So that way, when the housing counselor calls back, you don't have to do that verbal one-on-one again. But usually if it's a phone call, the first time, The borrower, the homeowner, just needs to say, hey, I have my third party on the phone. I give them permission to listen and speak on my behalf. So verbal authorization will work. And then following that, it would need to be some type of written authorization that they can put on file.
Awesome. Awesome.
Good question.
Okay. You were wonderful in how you went through the solution types: refi, repayment plan, modification, forbearance, short sale, and deed in lieu. And you identified the stage, like, okay, you're good times, signs of trouble, in trouble, really in trouble. Is there a go-to to figure out when people can just say, okay, which stage am I in?
So there isn't. So the question I have for you, Herman, do you want to create one with me? Because we can build one. So that's a really good point. So as I was talking through it, I was like, wow, this would be good to put in a document. So you read my mind, as you always do. So I think it would be good to have that, because there's really not any signaling for someone who's going through this. They may not know what step is the right step for them, right? Until they're already in the situation. And some of the worst things that can happen is someone's not sure of where they should do or how they should engage, and they ask a friend, or they ask someone who isn't an expert, and someone says, "Oh, don't worry about your mortgage. They'll send something to you in the mail." Or if you call, you better not tell them that you're late. There's a lot of stuff that happens there, right? So I think we should probably create something that kind of says, all right, it's kind of like a heat map, right? If you're in this stage, this is an option. This is where you are. You go a little bit lower, you're in the danger zone. It's a bit red. This is probably the option. Call your bank immediately, and then you're hot. You need to call your bank right now. So let's work together and see if we can create something like that. I think that would be great for the Faith-Based Alliance to have something tangible that they can take with them, that they can share and say, hey, if you're in this zone, you're good. If you're in this zone, you probably need to call your bank. If you're in this zone, act immediately.
Yep. Awesome. Thank you. And I've been taking notes, so I just want to go over these one more time. So, like, some clear-cut action items that people should take away, and I hope folk were taking notes. If you suspect you might be in trouble, or if trouble's on the horizon, be sure to proactively contact your servicer. Be honest about your situation. Growing up, my mom said that there are two people you never lie to: your doctor and your attorney. And I'm going to add your banker and your accountant. So you do that, you're good. Be dutiful and organized in maintaining and filing your paperwork and documentation. One of the worst things that can happen is, and this will cause paralysis, if you can't find something and you get overwhelmed by your emotions and you just throw your hands up and give up. So be organized with your documentation. And selfishly, and Rulon, thank you. You've been so wonderful about promoting certified counselors. Enlist the aid of and this is important, HUD certified housing counselor. They are subject matter experts. They are coaches. They can be your partners. Your bank is your partner too, but sometimes you might need a partner to talk to a partner. Just know that there are resources available specifically to help you. I'm going to ask, let's see, LaTanya, do you have anything? Yes, I'm calling you out. Don't hate me.
Oh, thank you for calling me out. Cora Fulmore thinks that is a great idea for us to create some type of document. I want to second it by saying, if you can make an infographic, because I need pictures.
Oh, yeah.
Not a lot of content. I need to understand what to do quickly. So I love that idea. I'd like to be a part of it. Home ownership is a big part of wealth, and foreclosure preservation. This is what we have to get right so that we do not lose this part of our wealth. And that, what you have started here, and I love it, Rulon, you've been doing it for years. This is not new to you. So you know how to do it. We just have to get this information out there. So Herman, you have a lot more work to do.
Thank you so much. So much. And I'm about to give myself some more work. So Rulon, as you were talking, I've been thinking, I think this has been a wonderful session. It's recorded. We'll make it out for the public. I think it might also be beneficial Wells Fargo, in their commitment to keeping people housed, they had a convening of subject matter experts in heirs property, in legal aid and housing counseling. I'm thinking we might have to have some kind of session, kind of like this, with legal aid and housing counselors, where we can start brainstorming about tools like we just identified to make available, and so that they can form partnerships in specific service footprints, so that they have processes in place for call this one, and together we'll call the service center. That will help not only homeowners, but also renters who are at risk of eviction.
Agreed.
So that's something that we'll talk about when we connect.
Sounds good. Good. Mm-hmm.
Let's see. I did that. I'm hitting all my notes. Okay.
I think you are.
All right. So now I want to share, Eric, if you will be so kind as to let me share. I want to connect folk. Rulon, this has been a fabulous session. And I also want to take advantage and let people know of some other resources that we have available. So I'm going to do this. I'm going to share briefly. There, and then I'm going to make it really cool so that I can do the presentation dealio. There we go. So here's what I want to do. I want you to understand that as part of the Faith-Based Alliance, we have these are the folk that have been my partners. Cedric Jones, Pastor Cedric Jones, was one of our founders. Reverend Kevin Murphy, who couldn't make it this evening, and Cora, who's here but couldn't log in. These are the people that have really helped to build this program. I want you to see the calendar of events that we've had and that we're working through this year. We've had wills and estate planning. That's another key part of keeping people housed. How we transition from one generation to the next. We did tax prep. We did another wills and estate planning for counselors. We did student loans at a time when people could be informed and make informed decisions about how to manage student debt before they even took it on as they were going into college, as well as those who already graduated and had it. This is our foreclosure and eviction prevention session hosted with Rulon Washington. On June 8th, we're going to do an insurance overview. If you're like me, you know you need it, you don't have a choice about it, but you want to understand it better because it is like alphabet soup, you know, between term, whole, universal. What's the best one for me for my purposes and my needs? We're going to have an in-person wills and estate planning. That's actually changed to the 15th in Greenville, South Carolina. And then we're going to focus on small business ownership. And July 27th, we're going to look at how best to utilize the Small Business Administration for the entrepreneurs. When I say entrepreneurs, I want people to understand entrepreneurs and small business owners. This includes Lyft drivers, Uber drivers, nail salons, barbers, caterers, restaurants, food trucks, anybody who has a business, this will be relevant for. And then we're going to continue in that vein on September 21st and deal with small business strategic planning. It's one thing to have a business. Very often we get so excited that our dreams have come to life and we're like, ooh, we forget to plan. And so we're going to show you how to go about not only planning, but tapping into available resources to help you plan even better. And then in time for the holiday, and this is what got us kicked off, shopping responsibly. And that's going to be our own core of Fullmore in time for the holidays. So that's what's on the horizon. If you are moved, it's almost like the doors of the church are open, and are interested in having and joining us in this endeavor or having your faith-based organization. And it doesn't even have to be a faith-based organization. It could be an organization that's committed to helping people make better informed decisions to build wealth, to have better financial outcomes. What you got to do is lay it out here. And I ask you send it to me. Here's my email address and Pam Carter, my colleague. This is her email address. If you know of someone who is in need of counseling services, and it could be foreclosure and eviction prevention, or it could be any one of the counseling services that are provided by the NFCC's member agencies, they are listed here. Please call this telephone number, 833-691-6299, or you can hit the link and it will take you to a member agency that will serve you in these areas in whatever geography you might be living. Let's see what else we got. So this is not, there's no pride of authorship here. We are one resource, but there are a whole host of resources that are available to you. And here is a list. You got us first, but then Freddie Mac has its Credit Smart Essentials. They've got the Home Buyer U for those who are interested in buying a home. Refi program when interest rates get in line. Diversified Resource Network consumer page is right here. We've got the HUD Housing Counseling Agencies, Federal Trade Commission. If you want to get your own credit report, and you should always do that at least once every year, this is how you can get a free run listed here, and the Consumer Financial Protection Bureau. All right, let me see what else we got. More resources to avoid financial traps, beware of scams, protection for older adults, Fannie Mae's fictitious employment scam alert, child identity theft. All these resources are available. And that's how you can connect with us. And that's it for me. Let me get rid of this. All right, Eric, if you could just take me away and make it so I don't share it, that would be wonderful, splendiferous. Yeah. All right, so here's the thing. We work really hard. Oh, please, Eric, can you put up the survey? Let folk get access to the survey, because we do want to get your feedback on this. We want to use your input to make this program even better, stronger, to make sure people are benefiting from it. And I think that I see a little, no, okay, I thought there was a question there. I didn't see it. That's what I got. I want to, Rulon, is there anything else you want to say? And you were wonderful. I really, really want to thank you for all that you've done. You've been incredible. One thing I want you all to take away from this is all the participating organizations, all the participating professionals, we believe in this effort, and we are genuinely excited about all the good that will result from its existence. I do have one request. For those who are joining by computer, please take the survey. It's important. We want to constantly incorporate your feedback into building a better program. So Eric, if you make sure you can get that viewers access to that, I'd appreciate it. I want to thank Eric Brandt for his producer skills. He's the one that keeps us organized and whatnot. I want to thank Rulon Washington, my man, who is just amazing in his knowledge and so humble in it. I want to thank our sponsors who make this possible. That's Freddie Mac, that's Wells Fargo, TD Bank on the small business side. I want to thank all of you, because without you, we couldn't have that. And I want to thank my partners, Cora Fulmore, the wonderful Latanya Gonzalez, Reverend Kevin Murphy, Associate Pastor of Illumination at Enon Tabernacle. And I want to thank Pastor Cedric Jones at Mount Zion Baptist Church of Philadelphia. As we conclude this session, I ask that you always choose to invest in yourself. I ask that you always choose to make informed decisions so that you can create better outcomes and keep your mind on your money and your money on your mind in a good way. And until next time, that's it. That's all I got. Be safe, be well.